Hi there, Serial Trader here. I want to do an update on the major US indices and looking at the hourly chart here for SPX and just going through the shorter term Elliott wave pattern that I'm kind of working here. So from our low there last week of 21.91, I like that we got this 5 waves up for either an A or a 1. And I believe in my last video there on the weekend, I said I'm working, some sort of corrective decline to set up for another long entry. So really, this is the most basic, Elliott wave kind of a execution you can do. When you see a 5-wave move, you look for it to be corrected by a 3-wave counter trend move, and then that kind of sets you up for the next 5-wave move if you identify it correctly and it works out. So after we had such a nice trending, strong 5-wave move off the bottom, obviously we broke multiple prior resistance areas on this time frame, of course the hourly time frame. Now that we've done that, we need to correct that move, right? So what I'm seeing here is a B, C potentially for either a larger B or 2. And I think we're kind of working an expanded flat here where we got a 3-wave move down in A, a 3-wave move up in B to at or near the previous extreme. In this case, it went slightly higher, I think, just ever so slightly. And then a 5-wave move down in C to finish this overall flat correction. And this is actually looking pretty good. So here I've done a fib retracement of this overall move up, this initial 5 waves up. So fib retracement off that point, we're kind of just sitting on that 38.2% retracement level. That's a fairly shallow retracement, although just looking at the actual pattern itself, it certainly looks like the C wave could be mature here and ready to reverse up. But if we do have to dig a little deeper, which wouldn't surprise me at all, we have the 50% retracement coming in at a little over 2400, 2414, and then of course the 61.8% retrace if we go deeper. That'll be well below 2400, the 2361.91 level there. But I kind of like the idea that we may have just about put in a bottom today. It's certainly early to make that call, but just based on what I'm seeing here with this actual pattern, if we go in, let's see if I can just zoom in a bit here. Maybe that's too much. Maybe 30-minute price chart would do a little better. Okay, 30-minute. So if you see here, we got our 3 down, 3 up in B, and it looks like you can get a pretty clean 5-wave down in C. So if I just propose a little count here, 1, 2, let's call that the 3, 4, 5, and obviously this will be of a lower degree. You definitely get pretty clean subdivisions here for this C wave, and you even have a nice extended 3rd wave within the C wave. So yeah, I kind of like, and you had a bit of a reversal there into the close today. Again, certainly not enough to confirm that we have a hard low in place, but it's certainly possible. The structure looks good. But I'll get out of this shorter term time frame. I just wanted to show that you can definitely get a clean 5 down in C there. So I'm currently just starting to dip my toes in there to some long futures. I put on one ES long futures contract, kind of in the 2470s area, and I'm not going to get too aggressive here until I see more evidence of a reversal or a little bit more downside, just to kind of average in for a better overall position price. So I'd certainly be willing to throw another contract in there at 2414. Or around 2400, that 50% retracement should we go there. So currently just one contract just to kind of dip the toes in there. But let's just do a little projecting here. So if in fact we do have a wave C low in place today for either that larger B or 2 wave, let's just kind of get some targets. And if we just do a AC equality, I think we'll just start with that. If we do a just a C wave up here, say for a larger wave 4, and again, we actually can't overlap this yellow line at 28.55, but let's just say we get close to it. That'd be 28.92. So an AC, if this is A up and this is B down, an AC equality relationship would actually get us that larger 4-1 overlap. But let's just say we fall a little short and only have a 61.8% relationship, 618 relationship between A and C. That would get us to 27.22. So from current levels, sub 2500, 27.22, you're looking at a decent 200 plus point move up there, even if we just get a minor relationship there between A and C of 618. And obviously, if we continue higher, say we get beyond that 4-1 overlap level, and it's more likely a third wave in progress. I mean, the 1618 relationship would get us up to, oh wow, you know, almost 3200, 3167. Now, one step at a time. That would certainly surprise a lot of people if we got up there. But I think it's certainly reasonable to expect at least a marginal new high above our previous high in the kind of low to mid 2600s. Okay. So that's really all I wanted to kind of go through on this SPX chart. Now on the ES futures contracts chart here, I just want to show that everything is still lined up. There's no real discrepancies between SPX and the futures chart. They're both very much in alignment. You got a nice clean 5 up, and then it looks like we have a nice flat pattern. It's actually even a slightly better looking flat pattern in that we've hardly gone lower than the A wave. So it's almost more of a traditional flat instead of an expanded flat, where you essentially have a double top and so far basically a double bottom. A slight stab down below that A wave low, but not much. So yeah, 5 up, 3 down, looking good on the futures, very much in alignment with SPX. And again, I did get in here in the the 2670s range just with one contract, and I will be looking to add either on a little bit of further weakness here down to that near 2400 level. I'd look to add there, and I would certainly also look to add upon some more confirmation of the upside, which we haven't gotten yet. And obviously the ultimate low to hold is that low down here. So on ES, that's 2174. That would obviously violate having a 5 up, 3 down by doing a more than 100% retracement. I don't anticipate that that's what's going to happen, but it is possible. These patterns can certainly fail, although usually the higher the quality of the pattern, the higher the probability of success trading that pattern. In this case, to me, you got a pretty clean 5 up and now a flat correction 3 down. So far, a fairly minor fib retracement. So it's always a little more concerning when you get into a deeper retracement, especially when you get down to the 786. That's getting low enough that, new lows are in sight. But when you just do a minor retrace like this, so far in between the 38.2 and the 50% retrace, that doesn't cause me a whole lot of concern. Obviously, if we break down and go deeper, that's obviously the risk you take with any trade. But the pattern is looking good. And obviously when this starts, or I should say, if this starts getting out of here, getting out of this hole, and breaking up, let's say we get above some previous resistance areas, get above that 2500 plus area, at that point I would be moving my stop up to either break even or at least just below the C wave lows here. But one step at a time. Right now this is kind of just the buy zone, the area to be building a position, starting a position, and then later on we'll adjust or manage that position. But right now I definitely like this for a buy. Initial stop below the previous lows down here, and then looking to tighten up that stop in short order once we start bouncing up there. Okay, so just get back to that SPX chart here ever so briefly. So you can see on this SPX chart, it's still a flat, but it works a little bit better as an expanded flat. We did make a slight new high in the B, and obviously, you know, substantial enough new low in C. So that's definitely an expanded flat. Whereas on ES, it's almost just a regular traditional flat. But they both send the same message, and that is that once we, you know, establish our support here in the short term, we should go off and make a new high above the previous high that we did there last week. Okay. And I believe that's all I wanted to go through here as far as the wave count. Okay. We'll go to the thinkorswim candlestick chart. And okay, so if I just throw the wave count aside, this looks, you know, fairly poor. We got up to this 20-day simple moving average. We've obviously rejected off of that. We gapped down today, closed below the T line. We almost got overbought on the oscillator. So throwing all the, you know, Elliott wave nuances aside, if you're just kind of a moving averages type of guy, type of person, you'd look at this as a shorting opportunity. And, you know, so far it was, if you sold there, if you shorted there, whatever, that was a good move. But I think the overall context on that shorter term wave count says that we should be looking for a buy here. I'm certainly doing that personally, as I mentioned with the long ES contract. But, you know, it is possible that we just tank down and make new lows. I don't think that's the high probability scenario right now. I'd say that's a much lower probability. I think even if we are going to make new lows there, we got to go up here, complete this little, if it is just going to be an ABC up, got to complete that first before we roll over. But I'm still very much aware that, hey, this can fail, and we can just roll over immediately and go down to make new lows. Definitely possible, but in my opinion, not probable. To me, the most probable thing is short-term bottoming quite soon here, and one more leg up, and then reassess. Okay, and you can see the 50-day simple moving average is now crossing below the 200-day, so you got your death cross, as they like to call it. Just thought I'd point that out. Okay, now the Dow Jones Industrial Average. Same idea. It looks like we've done a little ABC down. Definitely, currently, it's closed below the T line with a gap down. But I you know what, I kind of like, same with SPX, I like that we have a gap down, because you know how these gaps love to get filled. So now that we have a gap above us, that's just kind of a magnet, once we find our support here, a magnet to go up and at least fill that gap, and in my opinion, likely go up and exceed this local high here. Okay. And NASDAQ composite. So on the NASDAQ composite, same idea. We actually got above the 20-day simple moving average here on the NASDAQ, but then basically just rejected quickly, gap down, and we've closed below the T line here as well. Again, looks like an expanded flat ABC down for the NASDAQ. So everything's kind of lined up there in a similar situation. There's no real discrepancies between the indices. They're all showing the same kind of picture here. Okay. The VIX. Now the VIX kind of also has me leaning more on the bullish side here, at least short term. And yeah, okay, today was a decent down day in the market. But the VIX, I mean, it's kind of just sideways to down here. We're not surging. We're still below the daily T line on the VIX. We do still have that bearish engulfing very much in effect at the moment on the VIX. We'd have to break above that candle's high to invalidate that bearish engulfing, and that would be 67.69 on the VIX. So today is just kind of a doji day, indecisive day on the VIX. You know, we closed up a bit, but you know, for the VIX, this is a pretty much a flat day. 6 or 7% move on the VIX these days, that's almost as good as flat. So as long as the VIX remains kind of sideways to down here, that to me is a bullish condition for the market. So nothing concerning here as far as, you know, oh, we're about to tank to new lows. If that was the case, I think you'd be seeing the VIX, you know, shooting more aggressively higher, and it's not doing that right now. Okay. Go to the VIX VVIX tool. So we had that buy signal. That certainly had a nice rally resulting from that buy signal, but now kind of a neutral territory. So Yes, we've gone below the blue moving average on SPX, but I don't consider that a sell signal because we didn't really have the precondition as far as a VIX divergence before that happened. You can see that VIX and VVIX, they're largely in line with one another. They've been drifting down, essentially making lower lows and lower highs. And VVIX is still below the red moving average. So yes, despite SPX getting below its blue moving average, I would call this just kind of in neutral territory. The buy signal perhaps extinguished, but I wouldn't call this a sell signal. And if we get back above, if we get back above the blue moving average on SPX, which is currently 25.66, to me that would just kind of re-engage that initial buy signal, since we haven't really extinguished it yet. All those conditions didn't happen that would give a legitimate sell signal, to me anyways. All right. So that's really all I wanted to go through. Just kind of update where things were at. I did expect last week, after being able to identify a clean 5 waves up, look for a 3-wave corrective decline, to potentially position for a fresh long entry. I think we're there now, or close to it. So that's really what I wanted to share as far as the bottom line message. All right, let's see how the rest of the week goes. Serial Trader signing off.